Alrighty guys, what is going on? Welcome back to another episode. I hope you guys are all having a great and an amazing day today. We just got our new computer here, as you guys can tell, so get ready for a lot of YouTube videos, especially in this quarantine where I don't really have anything else to do other than make content for you guys. So literally get ready for it. Now before we jump into the episode, we're doing an AirPods giveaway, so it's super simple on how you guys can enter. All you gotta do is like the video, subscribe to my channel, and then like my Facebook page, Carter Farr. Once you guys do that, you guys will be entered. You'll be entered in for the giveaway. We're gonna be doing the giveaway sometime around next week or so make sure you guys do it. Alright, so in today's episode, we're gonna be talking about can you live off dividends? Strictly dividends. Hope you guys enjoy it. Hope you guys learned something. Roll the intro. Let's go. Bam! Hold on, I gotta put my AirPods in the case. Sign up for the AirPods giveaway. Now really in the episode here, we're gonna be talking about is it possible, how much you need, how to get started, how to start investing, and what to overall invest in. Now the very first thing you have to do to understand can you live off dividends is you have to take a second and realize how much you guys spend. Now if you guys take a second to realize how much you spend, evaluate your finances, and realize, okay, we have to build up a dividend portfolio that pays us, maybe it's $2,000 a month, maybe it's $1,000 a month, maybe it's only $500 a month. Now obviously depending where you live and who you live with and everything like that can definitely affect how much money you need. Now if you're somebody who lives with somebody else like your parents, obviously right now your bills are a lot cheaper compared if you're on your own. Now if let's say you live in New York City, obviously your rent and your mortgage is going to be a lot more than somebody living in like Arkansas or Iowa, somewhere that the rent's maybe a couple $100. So take a second to evaluate how much you spend per month. And so once you kind of evaluate that, the next thing you'd have to do is start. Now the reason why you have to just start investing, now the earlier that you start, the faster and the more money you're gonna get in the long run. Just because there's this thing called compound interest. This is really what we're gonna be trying to maximize. It's pretty much when our money is making money. So if let's say we bought a share of Apple, if let's say we continue to buy a share of Apple, Apple's gonna pay a dividend, and imagine if that dividend could pay for another share of Apple. And so now you get this cycle of dividend buying Apple, and then that dividend's buying Apple, and now you're getting a lot of money that is making you more money. That's just the basics of compound interest. Now that you guys took a second to evaluate how much money you guys need per month, the next step is, where do I begin? Well, obviously, we don't want to just save our money and just put it in a bank account because we're not going to be getting any growth in that. The annual interest on a bank account is 0.09% per year. That's crazy. Now in the United States, the historical return for the stock market is anywhere from 10 to 12%, which is amazing. So if you guys put $1,000 in, your money's gonna grow a lot faster than if you just leave it in the bank. So now that you guys kind of understand, don't put your money in the bank and you kind of wanna always keep investing in stocks. The next thing is where do I go to, what broker do I use? The very first one is Robinhood. Robinhood offers zero commissions. It's very beginner friendly to investors and honestly for people who want to just overall get their feet wet in the stock market. Now the kind of downside of Robinhood is you do have to buy full shares of the stock. Now if let's say you guys wanted to buy a share of Apple, Apple's trading at $220. You have to buy a full share of Apple to actually get the asset of it. Now the second one is M1 Finance. M1 Finance is a very beginner friendly investing portfolio. So if let's say you guys have $500 to invest, you can spread that $500 out into whatever stock you guys want to buy. So if let's say you want 2% of that $500 to go into Disney, and then another 5% to go in Apple, and then another 10% to go in index funds, you can set it up on that. And make sure you guys check out the links down below, because you guys can get some free cash. So really, M1 Finance, they do use fraction shares, which is pretty convenient because you can buy shares that normally cost hundreds or even thousands of dollars. You can buy them for a low cost of, I think starting out it is around $1. It's very, very beginner friendly. Broker that I would highly recommend using is TD Ameritrade's Think or Swim. So really this is just a very, very basic investing platform that allows you to roll in what you call a DRIP program. That's the dividend reinvestment program. So does M1 Finance, but not Robinhood. So this DRIP program allows you to take your dividends and reinvest it back into the stock. But overall, honestly, all three of those are fantastic. Make sure you guys go ahead and check out my links down below. Now, the next thing that you guys want to look into is what stocks do I need? So really, there's a couple of things that you guys can invest in. There's either stocks, index funds, or ETFs. Which one do you buy? So if you're somebody who kind of has a good understanding of what you think stock's gonna go up or down, I would look into blue chip stocks. So these are companies that are worth hundreds of billions or trillions of dollars. These companies have a lot of cash, they pay their dividends, and you wanna make sure that they've historically paid their dividends for the past 10 years. And it would be nice if they slowly increased them so you can get more bang for your buck. A lot of companies like this are like Apple, ExxonMobil, pretty much any company that is what you call a blue chip stock. They offer a lot of dividends and it's a great way to make some money. Now the second thing that you guys can look into is what you call an index fund. So imagine if you guys wanted to buy, a share of Facebook, a share of Ford, a share of Google, a share of Apple, a share of Amazon. That's gonna cost you thousands of dollars. Now imagine if you could get that all compressed into an index fund for 220 bucks. Right there, you get a great dividend of around 3%, and it's honestly a great way to make money because that historically has gone up in value 10 to 12% per year. So it's a great thing. Now, a couple of index funds that I like are ticker symbol VOO, SPY, VTI. There's a variety of other ones that are fantastic. Me personally, I do like to find stocks that have that, dividend yield of over 3%. And the reason why I like that is because I want to get the best bang for my buck. So if let's say you'd only invest into, let's say Visa offers a less than 1% dividend. That's what you call a growth stock. It's not really a high paying dividend stock, but it has gone up in value of around 10 to 12%. But the dividend aspect is pretty low. So I always like to find stocks that kind of pay over 3 to 4%. That's just my personal opinion, but obviously if you guys want to buy lower yields and more go for growth, that is still a great way to make money. Now you do have to understand that this whole process is going to take time. Obviously you're not going to be able to go out tomorrow and have $1 million in your stock account that's paying you $40,000 per year to kind of live free. It's going to take time, it's going to take consistency, and the best way to look at it is think of it as like a loan. Think of it as like a mortgage payment. So it's kind of like that reoccurring investment that you always have to worry about. And so if that's, say you want to invest $500 per month, don't skip, because you're gonna miss out on some massive returns in the long run. But overall, to answer anyone's questions, yes, you can live off dividends and you can make a lot of money from stocks. Now, some people only live off the dividends. That's what I plan on doing. And some people do just try to live off stocks. So they may take out roughly 4% per year to just live on the stocks and to, for their daily and, their normal spending. And some people may only live off their dividends. And so whatever one is a great way to make money, overall, the biggest thing is to just start investing as early as possible. You guys will not regret it. And especially right now with the markets falling, you're getting massive discounts on all these stocks that are normally very expensive. So, it takes money to make money, and you have to understand that it's gonna take time, it's gonna take effort, and it's gonna take consistency. Don't forget about that third one, consistency. We'll see you guys tomorrow in another episode. Take care, guys. Have a good one. Remember to always stay happy, stay positive, and I hope you guys have a great day. Stay safe, stay positive. I know it's hard out there. We'll see you guys tomorrow. Take care.